collided?
work with other investors too, so just helping them and learning along the way, and so kind of took a risk, but it ended up paying off. So I'm definitely looking to reinvest some of that money.
Are you in Thatch's office?
He's in Renton, I'm in Kent, so
Gotcha.
same owners or previous owner, but
Yeah.
not too much.
I used to hang my license in the Renton office,
Okay.
John L. Scott. So, but I'm at EXP.
Saul and Jim.
Yeah, cool. Yep, I've sent some flips and new build stuff myself over to Thatch.
Okay, nice.
Yeah, good stuff. Well, welcome. You're in the right spot for sure. Yeah. Anything we can help you with? What's else going on? Hey, Thomas, how you doing?
Howdy.
Howdy. How are you?
Sorry, in kind of a noisy environment here.
Oh, no worries. Kevin, how's it going? What's up?
Good.
Did you have a question, Thomas?
Yes. Does anybody know any market in Wenatchee?
Yeah, Beth Johnson at Flynn Family Lending. They'd like know that market super well. If you need some insight on the Wenatchee market, I'd call Beth.
Copy. Will do.
What are you looking at?
Well, I know some people living over there, so I'm thinking it's a lot closer than Yakima. And I used to go over to Grace Harbor for property, but now it looks like it's going to take me the same time coming from Linwood to Yakima, or no, to Wenatchee versus Linwood down to Hoquiam, where was my market until the things start catching on fire there.
Right. Did you say Hoquiam was your market?
Yeah, I used to be there for like 2 years.
Off market. I just got a Hoquiam lead, funny enough, that I could resurrect if that's your market.
It was. I'm kind of getting tired of driving all the way there, 3 hours there and sitting in traffic. What was it? Or is that something we need to talk offline? Like, or is it a long?
I need to look back what it was, because I got it while I was on vacation, because I'm lazy and I just go on vacation all the time now. That's all I do. Man, have I had a good summer. Boy, considering COVID and all that. Woo. Joe's rubbing off on me. That's the problem.
Yeah, Joe is almost rubbing on me to buy a van. Looks just like his. We'll see.
That's right.
Okay, we'll catch up on that property in Hoquiam.
Yeah, send me a text if you would. Just put Hoquiam on the text, and I will dig out whatever that was.
Okay.
Yeah. So I got that lead. Just so you know, Kevin, and for those of you, I got that lead because eXp Realty has a cash offer platform where they basically do like their own iBuyer program. And I have gotten tons of leads off that this year. In fact, I think I'm getting an offer on one of those this year. Kevin, I know you're at eXp. If you haven't plugged into that program yet, it works like a charm for lead generation. What's up? What else is Troy? What's going on in your world today? Enlighten us in a minute when you're ready. Ian, what's going down?
I'm closing on another house tomorrow. Getting it for $35,000. We're expected to rent it for $1,100 with a $10,000 rehab.
Oh my God. Is this war zone stuff though? I mean, is it management intensive, a lot of turnover?
No, it's out in the country. That's why the price is what it is. But it's should be pretty, like, I don't do any of the management. I have a team of people that take care of it. So yeah, it's getting harder to find these deals though, because the way the market is. Well,
that's an interesting thing that you're saying, because you're Mr. Out-of-State investor. What are you seeing across the rest of the Midwest or wherever you're investing, Southeast. Where is this one?
Yeah, in Georgia. Yeah, prices have gone up. They've like doubled. It was before my model was, get something under 50,000, rent it for 1,300. But I might need to change that to maybe get something under 100,000. So,
well, you must have killed it, during that time. If your properties that you've owned have increased, doubled, right?
Yeah. I mean, it's good. It's good in a way that the values of my properties increased, but I was wanting to buy a lot more properties and cash flow a lot more, but cap rates have compressed. So,
what about apartments? What are you just focused on mobile homes and single families? Why not trade up into apartments and leverage up?
Well, that's the thing. When I was first starting to invest, I was looking at apartment complexes, and I was seeing, 9 cap apartments. Now that's gone down. So that's why I went to like mobile home, because I could get a better cap rate. I can get above 12 cap in 2013 for mobile home. Now that's gone down. So even mobile homes now are like 6 cap. So that's why I'm going into single family, because I'm still able to get above a 15 cap with single family. So I'm just kind of chasing, whatever provides me the return that that I'm looking for. So it's more work though with single family.
I always find it interesting because there's 2 caps, right? There's the caps can be super low if you're on an apartment building, 3%, 4%, whatever, when you're looking at the as is current value, right? But if you're looking for value add projects, to me, when people say, oh, I don't want to, I'm looking at it. I mean, I like to qualify that by saying, well, yeah, it depends on what set of numbers you're looking at. Is it a 3-4 cap on actual numbers that the old school mom pop seller is operating on? Then that kind of doesn't matter. It's the exit cap after the value add that people need to focus on, right? And I always used to think, well, there needs to be at least a 1% spread or higher on the as is cap on as is numbers versus the cap on your stabilized numbers once it's renovated. You want there to be a spread on those cap rates, right? But I think the term cap rates can be confusing for people because they can be used. It really, really matters what set of numbers you're talking about when you're saying they're low or they're high. You guys agree? Do you follow what I'm saying? Troy, you want to pipe in or?
Oh yeah, I mean, there's a difference between purchase cap rate, operating cap rate, and exit cap rate. When Jan advertises a cap rate on his properties, it's always the operations cap rate. Like, this is what I put into it, this is what it's getting now. But, it depends on the property for sure. I think that I focus on purchase cap rate when I'm purchasing, just as a filter mechanism to understand. If I've got to put another $1 million into it, the cap rate better expand during an operational cap rate period. And then it better be, my sale cap rate. It's all just algebra, right? So can I control these levers to get the right price and right valuation when I'm financing or selling or buying?
Yeah, my claim to fame back in the day was I called it my Bible. And so, you could underwrite it. If you can't underwrite a deal on the back of a napkin and it's overly complicated, then it's probably too overly complicated. But I would do a 5-year basically cash flow forecast from lease up, purchase, renovation, and lease up, to then being able to project what my refinance would look like, right? And then beyond that, what if I project my refinance going to look like? We're talking, 200 unit apartment buildings I'm doing this on. then I would then be able to make an assumption about the future stabilized loan and determine what the stabilized NOI is, and then make some assumptions about what an exit cap looks like, right? And then you go from there. And then, as you know, I've done this many times, you know, and what I also found that is super rad was so awesome for me that you guys should think about, like Dion and Ian and stuff. Do you guys have, like, do you take your operating budget of your portfolio of properties, or, you know, or of your apartment projects individually is where you need to start, and then it can roll up to a portfolio, and you take the budget that you've set, your 12-month budget, month by month for the year, okay? And whether, I'm telling you, this is like super planning, super helpful, especially if things come up during the year or things don't go as planned, and you take your 12-month budget, and each month you plug in the actual numbers of the performance of that property, and then you reforecast forward. So what you do is you tie your beginning and ending checkbook or any distributions that you want to make to the bottom of your spreadsheet of your forecast, okay? And that way your cash check, your balance of your cash forecast forward based upon your readjustment monthly of your forecast of the operations, right? It allows you to decide, oh, I might need to move replacing the roof on that building because the cash flow will be this. It is so intuitively simple if you do it this way. If you're not doing it, there's like no way, in my opinion, to keep track of your actual cash position. You got to tie your checkbook, beginning and ending checkbook balance that first month, to the bottom of your bottom line, you know, cash flow of the property starting in January. And then you have just a formula, and it will update and project out for I used to be able to hit it, honestly, within like $500 for a 30-unit apartment building, because it's such a powerful tool. Right. And in addition to that, it helps you, you know, build your capital improvements plan if you're using cash flow to make some of your improvements, especially with scheduling and with contractors and how far out you need to schedule these days. It's super powerful to put you in full control of your decision making and future forecasting. And literally, you can use that same thing when you are looking to buy a property, right? And you're forecasting out. I would always do it for 5 years, because on big projects, that's what I would do. You guys can use 24 months, you know, or something like that, because you want to hold it long enough to get your lease up done and get it, you know, for your capital gains, this and that, if you were to flip an apartment building or whatever it might be. Definitely a tool that I would hope. It's really not that brain surgery complicated to just add into what you're doing. I don't know if some of the portfolio or some of these things you guys are using to manage your properties have anything built in like this, but I would just use Excel, guys, and keep it really simple. And it gained the trust of my principal so much that he let me go out and buy a $16 million apartment building, right? Let me buy on my word, right? That's it, you know, made a lot of money on that deal, guys. It was in Oregon, 211 units.
On that, Julie, I think a lot of investors, they don't think about, they're so focused on building financial models to purchase and exit. They don't think about modeling everything in between. And that's how you operate a business, right? It's business forecasting and financial planning.
Well, let's say you buy an apartment. Let's say you buy a 10-unit apartment building, and there are leases in place that are expiring, and you want to upgrade the units or raise the rents or whatever. That creates some downtime. Okay, that creates some vacancy. You need to understand, like, how long do you need to be at 90 or 95% occupancy before your lender will give you credit for being at that occupancy. So you might renovate and hit those numbers, and then your lender might say, we need to see that performance for 6 months. This is a way to control all the timing of that and to help make decisions on, maybe I don't want to renovate these couple units, these last 2 units, because it's going to push me out too far, and I'm good enough as I don't need to squeeze every ounce of juice out of this thing, to get my refinance going. It's really just it's a planning and forecasting. I don't know anybody who's a big player in commercial real estate or multifamily that does not use a forecasting tool as such that is tied to your checkbook, right? Super.
You can
actually,
set up forecast budgets in QuickBooks too if you're rolling all your financials into there.
Yeah, if you might have a portfolio of, you need to do it per property, and then it needs to roll up into, like, if you're using all that cash flow from all your properties to fund renovations, maybe on other properties, you can do a total roll up of that, right? You guys following? I would think Ian and Dion would be working, and Justin here. Justin, what's up, brother? Can you hear us?
I can hear you. Good afternoon or good morning.
Good morning. How do you use any type of forecasting, cash flow forecasting based on your operations and budget, right? On your stuff, or are you just hustling your way through everything?
Just unfortunately, I'm just hustling my way through it. Like, best practice, yes, you should be managing the cash flow, but I'm not. I'm just going as stuff comes in. I just take it down and figure it out later, because I still have a day job. If I didn't have the day job and the other money flowing in, it would force me to be more diligent on the cash flow.
Awesome, good stuff. What about you, Dion? You are a planner, sort of a lazy one, right? That's the lazy planner.
So the people who know me know that I overplan, and that's because with what I do, I'm explaining things, so I have like a concise answer usually. This is the one time I don't. I run a truck driving school with 60 staff. We do, $9 to $13 million in revenue a year. So I have a zero-based budget every year I got to start the company with. So you think that my real estate would look something like that because I know how to do this. No. I buy the property where I get at least a 10% cash on cash return. I set aside up to $30,000 in reserves. If that's ever depleted, then I might look at it. So the reason I'm in mastermind groups like this is to be around people who are doing it right, to figure out what right looks like, and start using some of that with what I do. My goal was to buy investments, not another job. So mine is like kindergarten simple. I have an Excel spreadsheet that shows monthly revenue and monthly expenses.
You know what's so awesome about what I'm telling you right now is you just need to add like 3 line items to that spreadsheet, and that's it. Mm-hmm. You know what I mean? And you would be doing exactly what I'm talking about.
But
just
right. Do you have an accountant? Just have your accountant do it for you.
So what works for me is my spreadsheet, has every expense with a note of what it is and what a property it's assigned to, and that goes off to the CPA. Really, all I do with the CPA is say, this year I don't want to show any loss at all, or because I'm refinancing or getting more loans, or I want to do a big, so I tell them what I want, and then the CPA makes all of those decisions. But that doesn't help me decide when to do the roof or when to add a bedroom or, those kind of expenses. Those, because my portfolio is really small. I have 16 units. So far it's really been, I'm not the big player that Julie's talking about, trying to add 20, 40, even, Justin's scaling way faster than I am. So as I grow, it definitely makes sense to do something like this.
Maybe in a week or two, I'll pull up something like this and show you guys what I'm talking about and how easy it is to work it, right? The other thing you guys should be doing, I think, is, especially since you're going to hold these long term, is making we used to use what I call a 5-year capital plan. And so you think that far out in 5 years, what do you think you're going to have to do in 5 years on those properties, right? And then make sure that you've got that built into your cash flow stuff, because I think rather than be reactive, right, you might say, oh shit, I think that those two buildings are going to need to have the roofs replaced or whatever. Or, hey, cat, I got this kitten wants to drink right out of my glass. It allows you to make your financing or decisions and stuff like that on your 5-year plan. Because unfortunately, with the way the world works these days and all the ups and downs that can happen like that, it could require lead time, a lot of lead time to get shit done now or in the future, right? With lending or whatever. And so, that might be fun for us to pull up a simple spreadsheet like that and just look at it. I'll resurrect.
As you scale, having that capital plan helps you get financing.
The other thing is it allows you to track what your NOI is projected forward. So then, okay, I am going to be able to hit this NOI and I got to hit it for 3 months. So the lender will refinance me. You got to really plan your lending and your refinancing. I think.
And I think if you're getting to the point where you're starting to raise capital from outside sources, saying, hey, this is what we may have to do, a capital call in year 2 because we know we've got to do the siding and the roof in that year. So, or we've budgeted for this so that we don't have to do a capital call when we hit this, so that we improve the value of the property. Having that as part of your operating systems, I can't believe that people don't.
Also, if you are looking to raise money and you show somebody that that's how you roll, that right there, like I invest with people because I don't invest with people because I 100% care about the property necessarily. I care about the asset class. I don't necessarily care about the property, but what I do care about more than anything else is the operator. I invest in them. They invest in the properties. And that is, if you can show somebody that you can do that, then you're going to be able to raise money because you're so thorough. I'm a real estate broker as well. You guys know this because you're bored with me talking about it sometimes, but I'll tell you what's an interesting thing that I've done. And for those of you that are interested in real estate brokerage, I have changed the way that I do my listing presentations to, instead of showing up and saying, here's a CMA, I say, I don't use CMAs. But if you have 15 minutes right now, I'm going to teach you, Mr. Seller, even if it's an apartment building owner or whatever, I'm going to teach you how to value your property. And we're going to agree together like a democracy on what the price is, because I'm going to teach you actually how to value your property. I'm going to show you the comps. We're going to talk about them for a second, how your property is the same, different, or whatever. And we're going to establish I basically sit and I literally don't do a CMA, but I teach them how to value their property. And then I said, if any other broker shows up and tells you that the value is different, you ask them why. Okay. Because all the brokers show up with lowball listing numbers because they want to make themselves look good. Right. It's working like a charm for me. And that same type of thing can apply when you're going to raise money from somebody. If you educate them or show them that you are in control of things, it'll be almost like a no-brainer for them. It'd be hard for them to say no to you, right? Good stuff. Good stuff. So Justin, tell us what's up in the tiny homes world.
Tiny homes are going good. We had a record month. We're testing out pricing. So before we had a flat price is $99 a day, and then we would discount as we get closer to the day. Lately, what we've been doing is bumping the weekends up to 140, and then the midday more in like the 80 range. And consistently, we're booked on the weekends, so that when we are booked, we're getting more revenue. So that's been going good.
What's the tenant base, or who shows up? Who's the renter?
It's just a hodgepodge of people. There's no one like set person. I guess there's two buckets. There's the people that want to buy a tiny home and they're like, well, we better test it out. So we get those people. But then the rest of the people are just, hey, let's try something different. We're gonna go to the mountains, or we're gonna go skiing, we're gonna go hiking, whatever. So they just want to try something different than a hotel.
Gotcha. It isn't like people that are on the streets that raise $80 to stay somewhere overnight.
You know what? When I used to have these in a mobile home park, and the lower the price we put, the lower the quality of the tenant. So two things happen. You know, obviously, one, we had more problems, and then two, we're using the asset more. We'll go back to your original discussion on capital planning. So I was like, we need to, one, get out of the mobile home park, and then two, start raising the prices so that, when people do stay, it actually makes sense for us.
Gotcha. So what's the cost of a good quality tiny home these days? Is it like 75, or what's the cost? I'm sure they're going up. They're going up to the point where it'll probably ruin the business model.
Yeah, the
Okay.
one that I'm building right now, it's been taking forever, but it's going to be 75 for the just straight up build. Then for all the furniture fixings and all that, it's going to be another couple thousand. So just for rounding purposes, call it like 80,000 when it's all said and done. But a good range would be 50 to 75,000 for a 16 to 24 footer.
How many square feet is that?
So they're 8.5 feet wide, and it depends on if you have a loft or not. Generally speaking, you're around 150 to 250 square feet.
So what about Boxable? Are you following Boxable?
I've been watching their videos. They're definitely interesting concept, and actually, they seem, if I remember right, they're sub 50,000. So definitely seem reasonable.
Are they smaller?
I'm trying to think. I thought they were like 20 by. They're more square than a tiny home is rectangle because it's got to go on the street. But if I remember right, these boxables are also can go on the street, but they fold out, so they can do more square versus rectangle. Then you can also stack them on top of each other, so you could
That's the
theoretically
thing.
create whatever you wanted out of them.
Are you getting a permit to build these tiny homes? Or are you building them on trailers so that way you can get around, getting permits?
The first three I bought from a guy who had already built them, so no. The one that is being built now is being built by a tiny home company that is getting all the permits, which part of why it's delayed was getting the permits with the COVID stuff going on.
You have to, but you have to get a permit to build it on a trailer?
I guess this is deep water for me because I don't know, but something to do with OSHA and getting sign off that it meets whatever the requirements are.
Habitability, maybe?
Yeah.
From what I'm seeing, I think, and I don't know, I've just kind of looked into this a little bit because I own a mobile home park with some empty spaces. And I also thought about just buying some land and putting tiny homes on it. If we were to just buy land and build tiny homes on the site, we would need, a normal permit like building a house. But if we build it on a trailer, then we can just wheel it to the property, after it's built and get around a lot of the permitting. So I haven't done it yet, but it seems like it might be a easier way to do it that way than actually building on site.
Why not just pour some pads? I don't know, this is Troy's department, and let people bring in their own mobile homes and charge some lot rent. Seems like the easiest path to income.
I think that's actually harder. It's easy if you already have the place and getting a renter. That's real easy. But having someone bring their own place, there's not as many people that have that. I mean, if you buy a mobile home or a tiny home, it's a lot of money, and it's hard to get financing on that.
Gotcha.
Just my experience.
Word. What else? What else is everybody working on? Eugene, what's up? Anybody? Jai, what's up with you? Anybody hear me?
Yeah, can you hear me?
Yeah, what's up? How's it going?
One day at a time. How are you doing?
I'm good. I'm good. Just back from vacation. Little Sun River Bend action. I think I'm gonna move there in like 10 years, I swear. It's so fantastic. Love it down there. Love it down. So what do you do, Eugene?
Wholesaling mainly for now.
Wholesaling? Awesome. Are you partnered up with any of these big wholesalers?
No, doing on my own. I mean, I have some partners that we have a JV agreement, and I'm bringing a few more. So that way, I guess we'll try. So that's.
Oh, I know you, Eugene. I didn't recognize you for a second there. What's going down? How are you?
Yeah.
Haven't seen you for a while. How is it going? Are you?
Yeah, can you hear me?
Yeah, I
Okay,
can hear you. I haven't seen you for a while. Now I know who you are. Now I remember who you are.
Yeah,
Awesome stuff. There you are.
yeah, here I am.
How are you? So what's going on? Are you,
Yeah, I'm doing okay. I'm trying to, yeah, you asked me if I partner up. I haven't partnered up with anyone yet. I'm trying to have, I guess, my own thing going.
yeah,
But I'm bringing on some partners, probably 4 or 5 now, and we're just gonna do deal splits, probably evenly, but it'll be my marketing, my whole thing. So basically, my knowledge and everything, and they mostly talk to sellers and stuff like that. I mean, if I can talk to whatever 100 sellers, how to go from 100 to 1,000, it's gonna be way too much. So I have to give up some of my profits to bring some folks who want to work with me, and I have a few that are interested. So I'm just getting my marketing stuff ready, getting the lists, comparing the lists, and
do you guys
getting
find
that
that a better idea than blanket marketing and looking for sellers might be this reverse wholesaling idea? Like, so Dion says, I'm looking for this, and Justin says, I'm looking for this, and Darren says, I'm looking for this, and everybody says, hey, Eugene, I'm looking for this. Go find it for me, right? And be more intentional about it than the blanket advertising that costs a shitload of money to do, right? I mean, those guys like Victor Ribo and those guys, they spend an ungodly amount of money generating those leads. They're dialed super.
Yeah, I've talked to him this week, and he says he's, I mean, of course they scaled a bit. So I asked him what's their marketing budget. So they spending about 70 grand a month now. I mean, I don't want to go to that scale.
Right.
I want to have a little bit more life.
Right. So what I'm saying for the wholesalers that don't want to burn all their cash, like Joe and I used to do, which is why we quit doing it, is that reverse engineer it, right? Just work with a handful of buyers that tell you exactly what they're looking for, right? And only call on that. That's my challenge to you.
Yeah, I mean that's one of the ways. So I'm always on the lookout for those. And so some people, blast out, and some people ask me, hey, do you blast out or do you go to a few people? And I actually do both. So if I have a potential deal, I'll talk with a few folks that I know buying in that area. And if they don't like it, then I just send it to more people, say, hey, you let me know if it works for you or not. And then I always, keep an eye on what people are buying. And then if I have something, I just go directly to them. If it's something that no one wants, I'll just, there's people buying all kinds of different stuff. So then I'll just send it out and say, hey, you let me know if this, if this works.
Gotcha.
So most of the time there's someone that it works with a timing, place, and
Gotcha.
type. So
Hey, have you guys heard of tokenization of real estate? Is anybody aware of what that is? So it's kind of like, it's an up and coming topic. To me right now, it's a distraction, but it is going to be a thing. And there are companies out there, like Solid, what are they called? Solid Block is one. That's different pond, but what it is a way to raise capital on your property by not selling your property, but by tokenizing it with digital currency, right? It's a up and coming future of real estate, blockchain and real estate combination thing. I'm kind of looking at it because I know some people that are into that, but just wondering if you guys have heard anything about that. I noticed, Kevin, what's his name? Kevin Bupp Troy, who's the big mobile home guy. Do you know who he is? Kevin, I'm going to send it. I'm going to forward this to you, Troy, just so you can see what it is. But if you guys haven't heard of it, then I'm not going to talk any further about it.
Tokenization of real estates. We've already done that. Partial shares and tenant in commons and people owning small portions of real estate. It hasn't worked for thousands of years. It's never going to work in the future. You can't get financing for it. It doesn't make sense. What, $100 and you're going to make 10 cents a month on it? No, it's yeah.
Well, this
I think it's a failed. Yeah. Everyone's got their take on it.
It's
yeah.
It's a crypto type of crypto and real estate combo.
Yeah, they're tokenizing ownership in the property, which is fine. But then who do you sell it to, right? Who's going to buy? Most of the companies right now, you have to trade within the company. So you have a limited pool of people who are interested in a limited sector of the real estate market. It's just a distraction.
I think it's a bit of a distraction, but I think it's going to happen long term.
I think that you will see that the whole title becomes digital, and you get that part of the cryptocurrency, but you're not going to have partial ownership go massive and be able to finance that way. I think it's not something that's going to work on small scale. Maybe if you go large into apartments and things like that, it might be something more, but people have been trying to do it since the Jobs Act.
We'll see what happens. So Jai, you need some help on zero lot line? What's up?
Yeah, I was going to put in an offer today on a property near Western Washington University, and it's on a zero lot line. I've never dealt with a zero lot line. I know what they are, but I'm just trying to figure out if anybody here has experience with zero lot line. It doesn't have an HOA. Like there's two different type of, it's kind of, they share a wall, but it just like it just seems like a townhouse to me, essentially. But any sort of advice on zero lot line properties would be.
I don't think it has anything to do with financing objections or anything like that. I think it.
No, I'm just saying like on a pure, like has anybody rented out a zero lot line house and any issues with the other side, and all that kind of stuff.
I owned a zero lot line house about 3 houses ago. And it was no issues for me.
To the tenant, what's the difference between that and a duplex, triplex, fourplex? Really, I mean, they're just sharing a wall, right?
Yeah, it's just, I mean, the rents won't be as much as like a single family home, but I think the only issue I have with this property is that like the lot size is not that big either. So I'm just trying to see, it's just like
what you need to check on is the sewer. Is it a shared sewer? That kind of thing.
Cleaning
lady. It is a shared. Yeah.
Right. And so if I'm looking at stuff that has anything shared in regards, hey Renee, we can hear you talking, Renee. I would be assessing who the neighbor is, right? Because if they're not like capable of paying their share and the shit needs to get done anyways, then you need to be prepared for that, right? On like a sewer or a retaining wall or roof or whatever, right? I'd be looking as much at the neighbors and who the owners are, if they.
Yeah, I just never heard of a town home style property not having some sort of HOA or some sort of fund for those issues. So it's a little bit of a red flag for me, but I was trying to buy both of them, but they're two different sellers.
I don't think it's a problem at all. I think that you need to read you need to pull the title report and see if there's joint maintenance agreement on the title report, and that will spell out who pays for what and how much. And there's lots of no HOA properties and townhomes like that. I don't see it as a problem. Does anybody else? The biggest problem being the neighbor who has to share the costs. That's what I think. Anybody else? Go for it. Go get it. So do you think there's competition for something like that, Jai?
Well, they had an all cash offer from somebody from overseas, and then they just got super complicated. So they just want to sell to a local person. I mean, Whatcom County it's. I mean, you know, every single county is ridiculous right now, but Whatcom County, especially in the markets where I'm at, is just absolutely insane. It's just so hard to buy a property that cash flows, you know.
So why are you buying it? Like, what's the appeal, you know?
I mean, it's like almost 2,000 square feet. It's got 4 bedrooms, 2 baths, like a
Are you doing
5-minute
boarding
walk
style,
to
rent by the
campus.
room? Would that
Rent
be
by the room. Yeah, rent by the room to students.
Are all
So
your
it makes sense.
properties rent by the room over there?
Yeah, all the properties are. I mean, we still treat it as a one master lease. We don't do like separate leases, so it's essentially like an extension of the dorms.
Is who signs the master lease? One person that has the right to sublease?
No, all of them.
Everybody. Gotcha.
Mm-hmm.
Alex,
But one
so
person
financing, when you're getting this rent by the room stuff, how are you financing those? Are there any rules of engagement on that? Because that is, you know, and like he says, in this area or in our state, it's like you have to force the deal, right? You have, not like Ian, who's, you know, buying stuff for 35 grand, putting 10 grand into it and cash flowing like a monster. Here you have to force the investment to happen, appreciation, unless you're like Dion and you're buying cash flowing properties and you're getting, you know, those paid for with your cash flow and letting them appreciate and adding some value. Alex, anything that's a hiccup in regards to financing on rent by the room model?
Yeah, so for certain things, we still want to see, you know, standard 12-month leases. Rent by the room is still kind of case by case for us. Like we want to see, like, you know, some history of that. We want to see, we want to take a look at what the market rents are for similar properties in the area before we would approve that kind of loan. That being said, we have done those before. A lot of times though, we'll use like a different loan product and not like a 30-year fix. Like, you know, we have like a 3-year product that we can use that's kind of like a decent bridge for a borrower to maybe get to, you know, something else. It'll be slightly higher. It'll be higher interest in our 30-year fixed product, but it'll be, you know, lower interest in, say, a hard money loan. So it's kind of like, you know, an in between. Does that answer the question?
So is there an issue though between, obviously market rents for a single family are going to be lower than the rent by the room? That's the whole point of why they're doing it.
Yeah. So, I mean, like I mentioned, we're still going to want to see, so for our 30-year fixed product, we're still going to want to see standard 12-month leases. We'll underwrite only the number of leases that the unit's legally allowed to have. So it's like, if it's a single family residence, right, we'll underwrite 1 lease, duplex 2, you know, that kind of thing.
So in that case, it wouldn't be any different because there's a single lease, a 12-month lease with multiple people on the lease.
So we could accommodate something like that. We have done something similar to that in the past.
The problem is it's not going to give you credit for your premium rent. Is that the problem?
Yeah, so the problem here is that we would probably cap our underwriting of the rent at market rents.
Which is fine because we don't buy properties that don't, you know, cash flow at market rents. We don't need to do the rent by room model, but it just is a better business model for us. But yeah, okay, I understand.
So what you're saying, Jai, is you always underwrite your purchase to a regular single family.
Yes.
And then you just bonus yourself on top with the rent by the room model. And you're understanding that your loans, that your refinances or whatever are going to be based on the single family, right?
Yes.
Do you guys understand that? That's very important to understand because I could see how people go into this and they don't understand the lending side and they think they're going to get credit and their money back and their refinance based on these premium rents they're collecting. And then they go and they buy it because they don't know what they're doing, and they're screwed because they can't get their money out of, and they have investors that they told will work this way and they can't get their money out. So, Alex, right, as you're jumping into this game, you're going to need to know how to force appreciation beyond just unless you're just flipping, which are right. If all flippers at some point realize they should have kept some of those properties, right? I give you 2 years to be like flipping until you go, shit, I should have kept those properties. I think it's, I don't know why people don't understand from the beginning that's going to happen. So, you should think about that on your planning now, or like some of my other friends do, they say, I'm going to flip 2, keep 1, right? Because they know, they need to move in that direction, because that's how you grow your wealth. Flipping is a day job. Okay. You're just giving yourself another day job that gets taxed at ordinary income tax rates, right? You got to move to growing your wealth by long-term owning property, right?
Yeah, you can also flip to upgrade as well.
Flip to hold.
Yeah.
Right?
Yeah, I mean, we did a property where we flipped it to get a better property down the street. Like, we had enough capital in there that we could pull out, and yeah.
You mean like you flip to raise capital so you can get cash in the bank to go
to get something bigger
and better. Exactly. Yeah. Exactly. Cool. What else? Anybody else got stuff going on today? It's 12:18 almost. Alex, you got any questions? Or thanks for joining us today.
No, I appreciate letting me in the meeting, and I just like hearing everybody, and for everybody I'm new here and a newer investor, just got my first flip done, and like Julie said, it's not my goal to flip forever. I do want to eventually, build up a portfolio of rental properties, and so just kind of dipping into the investing side right now.
Awesome. Darren, what's going on with you? Any updates?
I'm not having any fun.
Not having fun?
No, I'm trying to, the county's wanting, schedule wants me to get new drawings for everything. They want an engineer to come out there and approve all the drawings, because the guy who started the project didn't bother following the rules. So he tore everything apart and didn't get his permits. So now we're trying to find an architect and an engineer, and everyone I talked to, they said, yeah, I can work on that project. And then a week or two later, I find out, I'm too busy, and I can help you in January. I mean, okay, well, that's not helping me now.
You know what you need to do is you need to find a junior architect, like, you know what I mean? Talk and let them do a side job for you. Somebody who is qualified to get it done, has the credentials or whatever, but is like on the payroll of the, a junior person, right? Kind of like when plumbers moonlight. Get somebody to, I don't even phrase it, hey, who's out there that's a, up and coming architect or whatever that wants to moonlight and get paid a premium. You might have to pay somebody a premium, which will cost you less money than waiting and burning your time.
Yeah.
Right? Or there are maybe flippers that have design build people built into their stuff already, right? Well, the problem is its location, right? Where is it at?
No, I think it's just timing. Everybody's really, really busy. I've called a dozen different companies and drafting companies and engineering companies, and they're all just really busy. So the two that had openings for me, one is still looking to get information back from the county. The county guy doesn't want to call him back. And the other one was going to do it. But while he was waiting for phone calls to come back for his proposal, he got another job, and it's going to keep him busy for 3 months. And so he said now what he was going to do next month, he can't do it until January. So now I'm kind of back to square one. unless this other guy pulls through, which would be great. I don't know what his schedule is yet, but it's anything better than January is going to be good.
Hmm.
Yeah. So I'm kind of stuck. I can't do anything with him. Just watching it sit there. I'm used to driving back and forth and swinging my hammer, but right now I just sit and wait. It's very frustrating.
Put a big for sale sign in the front yard. See if people call you.
Well, I got it. I've got a investor buyer on the line, but he wants my permits to be signed, sealed, and delivered as part of the deal. So he, if I can get the architect to do the work, then I can get it sold as is. But then I get to the point where if I got my permits signed, sealed, and delivered, I just kind of want to do it, get it done, make a real profit.
Gotcha. Yeah, tough one. Timing, bad stuff.
Yeah.
What last question, what do you guys feel like, Ian, what do you feel is the number one thing impacting your business right now? Is it lack of stuff to buy, financing, timing of contractors and permit? What's the number one thing that is impacting? Like for Darren, obviously it's architecture and hiring those types of people.
I'd say good employees. It's hard to find a good team or add on to, the people you have. That's really like I have a house that I bought last month. I haven't even touched it because my team has been busy doing other stuff. And now I'm closing on a house tomorrow. So it's like, and I could have bought like more houses, but I don't want to just, have a bunch of houses sitting. So if I could get more people, and I'm also trying to look into more markets, but it's hard to find the team for them. So if I could get, the team in other markets, I'd be buying in, other places.
What about in those markets, bringing a real estate agent on as your partner, giving them 10% of all the deals, they'll find you deals and they'll be motivated to help you get the projects done because you're giving them a cut. That's how, honestly, the smartest people, the biggest players I know, they share the wealth a little bit, and then people kill themselves to work with them or to please them or to whatever, because they're getting sweat equity by, operationally managing stuff, right? Kind of the asset manager. You hire an asset manager in those markets and let them in on the deal. Won't cost you much. It's probably costing you more to be sitting doing nothing.
Yeah, I'd be open to that if I could find a real hustler that can find the deals, knows all the people.
I think those could be two different people, because I think if you hire somebody that has all the resources and connections on the contractor side and the project management side, right, and knows enough about it's not rocket science to get something leased, that person will then learn what it is that you're doing, what you buy, and then they can start bringing you the deals rather than waiting for somebody who knows how to bring the deals to then be the project manager. I think you go in the reverse, because your problem probably isn't finding deals. Your problem is getting somebody to actually take action on your deals once you own them. That's my 2 cents. The reverse. Look for the reverse, right? And those people want to work hard for you because you're giving them an opportunity to get in these deals, right? I don't know.
So you'd give a percentage to the agent, but what about finding the agent? I can find, like you said, I can find the deals, but having people that maintain them, the contractor,
But agents know contractors, right? You're looking for an agent that isn't necessarily a specialist in bringing you properties, but agents specialize in knowing who the contractors are because they got to deal with that for their listings and stuff like that, right? Or, that's what I'm saying. Then you teach that agent how to look for investment property deals for you, right? So you're trying to just leverage their network of contractors, right? And their knowledge of the market versus them finding you a deal. You can find your own deals, right? That's like, you could have 10 people finding you deals. You need the person that's going to bring I'd be like interviewing people like, how often do you help your clients make improvements to their place? right? And if somebody's like, I do it all the time, that's like my niche, like it is for me, right? Then that's the person I would bring on as my partner because I want access to their network, not their deals. I need their network of trusted contractors. But I'm
Right.
just talking out my A here. I'm making this shit up as I go.
Well, I've actually talking to someone in Michigan that has a team of contractors, and he actually also is a wholesaler as well. So he actually is the one that mentioned it to me. He's like, hey, could we partner on some of these, you know? And I was like, wait, you're gonna bring me the deal, you're gonna bring me the contractor, and he's actually wants to put in half the capital as well. I was like, okay, I'll try one with you if you want to bring all that. I mean, if I'd be okay with like giving them some equity without putting capital, to be honest, if they can bring all the resources for it.
Exactly. But what I would do is I'd say, hey, give me the name of a few of your buyers that have bought from you as a wholesaler and find out if it's been a deal or if it's been a problem, right? You still need to vet people, right? Because maybe the guy's like selling shitty deals to people because he doesn't know his numbers or something, you know? Right on. All right, guys, 12:26. Anybody else got anything today? Kathy, you got anything? How you doing?
No, nothing. I'm focusing on my taxes, my 2020 taxes.
Hey, I just sent mine out too. Just overnighted my 2020 packet.
That's a pain.
Yeah. I'll tell you what's a pain is that my big money partner on my big apartment stuff did they redid all the K1s, and because they did a depreciation acceleration election, and they did it like now for last year, gave nobody the opportunity to plan, right? Because that creates a bunch of extra loss for all the partners, right? And if I had known that I had to have a bunch of extra loss, I would have offset that and sold some of my other stuff that is going to have a gain, right? Some of my other investments to use that loss. And I didn't get that opportunity. And that's pissing me off, you know? But they're in charge, so there's nothing I can do about it. So that's the downside of being not the operating partner. So anyway, right on, right on. Dion, thank you for hosting. I probably should just turn the whole damn thing over to you.
I was totally happy to host. This next month, I'm traveling. So my goal is to find places with Wi-Fi for Thursdays when I can, but literally just driving all over the country and don't know where I'll end up on Thursdays.
You're just being a nomad for a month just to take a break?
Yeah, I'm going to get my truck with my brother, and I've been to like 17 countries and 8 states.
Nice.
So I'm going to try to flip that.
Good for you. Well, Joe should probably
look up real estate meetups and stop at one all the time. Every state, hit one in every state.
One rental at a time. The YouTube channel put a challenge out on his for people to reach out to me for places to go. So I've got about 5 or 6 meetups that I'm going to so far.
You should go down and see Kevin in Florida. You know,
I'm going to be in Florida. I told him last week, I told him I'll look him up when I'm there.
Cool. Awesome stuff. All right. Well, I see you guys next time. Thanks for showing up, and enjoy the last few weeks of your summer. For those of you that have kids, we're almost there. We're getting rid of them soon. So, all right, guys.